What's going on, Wayne?
Hey, can you hear me?
I can. How are you doing?
Good.
Ah,
Ryan,
Michael, what's going on, man?
we have a new friend.
Hello, Ryan.
What's going on?
Jim
How's,
Riccio.
how's it going, guys?
Good.
He's the spotlight this month.
Oh, fantastic. What kind of trouble you guys getting into this morning?
Spotlight stuff. Work for me.
We haven't had enough time to get into trouble
I
yet.
know,
Yeah.
right?
Give us an hour. We'll get back to you on that one.
Yeah, well, oh, 1 second.
Oh, there's people here.
Hey, Warren.
Hey, did I run in when you got talking about something else, guys?
Yeah. How about a Denver accredited capitalist? That's what we're talking about. Yeah.
I'll be there. I am excited about this. This is going to be fun. You going to be there, Mike?
I am.
Good.
So,
I
my
look forward to seeing all of y'all.
friends coming.
Oh, excellent.
Hi.
You guys need another chair?
Hi.
Yeah.
No, I'm going to step out, so you go ahead if you want to.
Oscar, how's it going?
Say hi to Ryan. Always say hi to Ryan.
Good. Sorry, everyone. Am I late?
No,
you're
fine.
early
Okay.
still.
You're early.
Yeah.
So it's a webinar or it's a or a meeting? Because I saw Marty. It's coming in as well, right?
Yeah, Marty's coming in as well. Yeah, so
Okay.
yeah. So Oscar, we're in this really cool group. A bunch of go-getters, entrepreneurs. What is it? 30 grand a year to be in Black Card roughly.
Right.
And basically everybody has a business of some sort, or they want to start their own private equity fund or venture capital fund or raise money in some fashion. And so within the group, there's all these office hours with different coaches and things. And so the purpose of this call has a legal and compliance component to it.
Okay.
And as you know, Reg A plus is very heavily regulated. And so yeah, that's the focus of this call. But yeah, it's a fun group.
Okay. Good. All right. Yeah, Reg A is the holy grail, of capital raising.
That's right. Yeah, Wayne, how many people would you say are in Black Card? About 800 or so, maybe 750.
Yep. I think we're closer to. I can look right here. 792.
Wow.
Black Card. So what is Black Card? Sorry, my apologies.
So Black Card is there's a Warren, do you want to take this one?
I can answer that. Black Card is a coaching group essentially from the fund launch organization. So Bridger Pennington and Mason, I always have a problem pronouncing his last name, Veranes or something like that. Anyway, Bridger and Mason had this idea probably 4 or 5 years ago that it would be okay to teach people how to create funds, alternative asset funds without, spending 30, 40 years on Wall Street and working your way up through the big corporate funds before you ever launch your own fund. And so as he did that, he started doing that with all kinds of different educational products. And he created a community of people that joined him to do that. And his next level of coaching was the Black Card group. So these are people from the Fund Launch Committee community that are paying a large sum of money that includes legal services, all kinds of things to actually help people figure out investment thesis, go through step by step until you actually launch a fund. And so Wall Street Rebels is one of the call tags that he uses. And the reason for that, Oscar, is because we're accomplishing something with alternative investments in a time frame and in an education process that just doesn't happen ordinarily. And here's
Okay.
Marty.
Thank you, Warren. I appreciate that. Explained it way better than I could.
You're welcome. I may have used more words than I needed to, but hopefully it made sense, Oscar.
No, it did. Thank you. It's just when you mentioned the numbers, I was just curious what kind of a group. I mean, it's good to see that people are getting themselves educated. I think it's going to get easier now, though. In these kind of things with new purpose-built cognitive AI that is specifically for, it's going to have to be very specifically trained for this. It's going to require a firm in the space already that's going to create it. It will be able to help everybody go from A to Z, probably get them to around T, and then they'll need the last mile, from the legal and the accounting, but at least all the other stuff that takes months and months and this and that to get right through it. Yeah, I think we're getting there. I mean, because in the last 5 years, when it came to funds, we've come from very messy, very unstructured to, hey, look at what we can do really quickly, and we made it into a framework. Still required a little bit of knowledge. People can take the playbook. You add that with a cognitive AI that it's been properly trained for this specific only. That's it. Its only sole purpose is this. Yeah, it will make it feasible for everybody to participate.
Wow, that's great, Oscar. So hey, let's get going here. Give everybody a few minutes to jump on. So Oscar, just again, let me set the stage here. This group here, this audience is a group of ambitious go-getters, entrepreneurs, emerging fund managers, business owners, and we're all trying to figure out the best way to raise money and scale our business and start our own private equity funds. So there's probably 700 plus people in this group, and it's just a really, really great community with great people. So disclaimer, this is not supposed to be financial or legal advice. It's intended to be educational. I am not a coach of Black Card. Let me make that clear. I'm not a coach. I'm just a member of the community, and I want to try to add value. So today we have two industry titans, I'd say, in the equity crowdfunding space. We've got Oscar. He's the founder and CEO of Koreconx. It's one of the top platforms, if not the top platform for raising capital. They have over 700 plus partners globally, from broker dealers to legal to accounting and a whole bunch of things. I'll let Oscar get into that, but he's really, truly a pioneer in the space. And then Marty Tates, most of you guys know Marty, but for those of you that don't, Marty is my go-to SEC attorney. He set up over 100 funds, domestic, offshore. He co-authored the 2012 Jobs Act. He actually set up Bridger's dad's first funds. He's a nationally recognized SEC attorney, and he's probably been on about 10 of these calls with me, just helping the community out get through their biggest legal challenges. So if anybody ever asks me my recommendation for a legal partner, I always recommend a high caliber attorney like Marty, because you just don't want to take shortcuts when you're dealing with other people's money. So that setting the stage, the purpose of this call was to bring on industry experts with a top software that may be an option for people in this group. So we're going to start off with Oscar and end with a Q&A from Marty to address some of your legal hurdles. So Oscar, I know Koreconx does so much, and today I want to focus on Reg A plus if we can. But so first question, when and why did you start Koreconx?
Well, first, good afternoon, everyone, or good morning, wherever you may be, or good evening. So my name is Oscar Joffrey. I'm one of the co-founders of Koreconx. So my journey today is on the 14th year. So like Marty, we fell in love with it. It's a lot of love, a lot of passion. I love to tell you that it was all just for the money, but it isn't. We truly have a passion to democratize the capital raising, not just in the United States, but globally. But the US is obviously the frontier. And I was very fortunate 14 plus years ago to meet the father of the Jobs Act, David Weil, the former vice chairman of NASDAQ. And he is both an advisor in my company, and he's also a shareholder in my company. I'm very honored that of all the companies in this sector, this is the only company that he puts his name on it. And the reason for that, the one thing you're going to hear from us, there's only one way we do things, and Marty knows this, compliantly. If it's not, I walk. And when I walk with everybody else. It's really easy to make money in this space. It's really easy to use the regulations to raise capital for your companies, but it's also, people feel like sometimes they can cut corners, but cutting corners at the beginning means that it's a corner here, it's a corner there, and it just creates a chain of events that eventually, well, we all know where that could end. And that is my history.
Awesome. Thank you. So what are the challenges of Reg A plus, and how does Koreconx solve those problems?
So first of all, so you all know the regulation allows you the ability to raise up to $75 million every 12 months from the general public anywhere in the world. So, so the challenge right off the bat, you have an audience of 4.7 billion people. You're like, whoa, there it is. That's number one. But I'm going to shrink it down even better for you so you can maybe get a better number. 233 million Americans. So the biggest challenge of any opportunity isn't the legals, because you work with Marty, you'll go through that paperwork, getting that filed, and the SEC knows Marty's work. So that's the easy part. When I say easy, as long as you got all your book of records and all that ready, it's pretty simple. Then it's the audit, putting all that together. Once all that's done, Marty's done. Marty got you qualified. So what's the real hurdle? How does the world see you? How does anybody know you even exist as a company? What do you do? So what are you selling? Are you selling something to investors, or are you selling to people who have like-minded approach? And in the early days of the Jobs Act, when Reg A was first introduced, you didn't have to do anything other than say, I'm a Reg A, and people came. It really was that simple. I mean, you still needed to do some work, and in the last few years, since COVID struck us, it started shifting from, all you had to do was hang your shingle to now you need to provide value and understand the audience you're targeting. So this is where people fail, and this is where people succeed. And this comes to answer your question, what is the biggest hurdle? The biggest hurdle is when people do not understand what it means to raise capital from people you cannot call investor. And people go, what do you mean? Don't call me investors, because as soon as you do, your mindset is going to change completely how you approach the market. What is that? Well, if you're pre-COVID, the Jobs Act, the only investors you can target were accredited, family office, institutional. So what that mean? You came with a deck, you did a presentation in the boardroom, you give them the numbers, it was all about ROI, and they're going to write you a big check. They want a board seat, they want all the sweeteners and all that. That's that world. And people would take that same philosophy to this world and expecting, oh yeah, they're going to get it. And they didn't. People go, but Oscar, look at this. I'm giving them a good ROI. They're going to get all this. But you're talking to people that until 2015, they weren't allowed to invest. So you want them to have all that knowledge. All the other ones have 20, 30 years experience, and they have nothing. They're just starting. And so that's the biggest hurdle in Reg A, is making sure that you have a really clear understanding what it takes to actually raise the capital. The success of those who raise capital is, I'll give you an example, a company called BrewDog Breweries. People go, well, Oscar, that's easy. It's beer. Anybody can sell beer. Not really. BrewDog Brewery was a brewery out of London, England, in a pub. And if you've ever been to London, every pub has its own microbrewery. So there was no distinction in anything they were doing. So what did they do? Well, in 2012, I published a book at that time, letting everybody know that if we treated investors as if they were our customers, what would change in your mind the way you went after them? And that's exactly what the CEO did. The company today has 1.2 million punks from 86 countries. They refuse to call them shareholders. And the minute they did that, even the young lady they hired in the early days, when they were only around 30,000 holders, They hired her and they said, Oscar, never say the word shareholders around her, because we told her all these people paid to become brand ambassadors. And she couldn't believe it. And that's exactly what they did. Her mentality went, and look at them today. Today, they raised over $300 million. They're a $3 billion company. They are now the 5th brand recognized in beer. And today they have, in the United States, they have hotels, restaurants. So anything is possible when you understand who you're targeting. And every company has this, whether you're B2C, B2B, you have a community, could be partners, could be your customers. But we've never thought of the ability of, wow, they just bought $20,000 of my software. Why don't I make them a holder, right? People just never put those two together. And then once you make someone a customer of your business, imagine the things you do. You go to trade show events so you can give them swag. You do advertising. Look at all the wonderful things you do. When you hear the word shareholder, investor, it becomes this antagonistic terminology that you often see in the public world. Well, in here, if you do it right, you build a community, you build your business, you build all of it, and you have all these salespeople now that could sell your brand day in and day out. And that's the difference between success and failure in Reg A.
Wow, that's a really fascinating story. Oscar, could you share maybe another success story, like another company for another use case of Reg A Plus, of what you've seen through Koreconx?
Yeah, I mean, so we're seeing different types right now that we hadn't seen before. So there's the microbrewery. Then we have Legion M. Legion M is, I mean, he's on his 9th time around. So as I said, every 12 months, you can use the regulation. So he's doing Reg A, Reg CF, Reg A, Reg CF. And he just keeps doing that over and over again. His goal, he wants to have 2 million privately held Legionnaires in his company, and he's creating films. So that's another example of someone who's, again, targeting the audience, not as an investment, but to be part of the journey. Another company is called Gratis. Gratis is unique. So why is Gratis unique? Because Gratis went to the market shifting itself from, so they typically do real estate funds. So everybody knows that, you see a good real estate project, you go to the high net worth, great. But he was getting pushback from the investors. So why are the investors pushing back? We go, well, wait a minute. If I use this regulation, I'm on a 10-year hold. If I use this regulation, it's a free trading security. See, you have to understand, Reg A has some really wonderful attributes. One, it's free trading, and you can sell it to anyone over the age of 18. It's a free trading security. And so all of that, where you can have accredited and non-accredited tied together, it's amazing. And the investor who is accredited doesn't need to go through the accreditation process. That's another thing that's wonderful. So in this case, they're using the regulation. They made the minimum $100,000, and people go, but Oscar, this doesn't make any sense. Reg A is for everybody else to invest. It looks like they're targeting the same audience. And I go, yes, they're targeting the same audience. And that audience is buying into that because for the very first time, they bought $200,000 blocks, and immediately they can go out and sell it to the people they couldn't sell it to before with no barriers whatsoever because it was Reg A. So that's the second. The third one, they're called marketplaces. Now, marketplaces are going to be, I believe, the up and coming for the next 2-3 years. So this model is where, let's say, I'm going to use the good example is collectibles. So let's say one of you has a collection of cars. You got about, let's say you got $200 million collection of cars, and each car has got a different value, anywhere between $500,000, $200,000, $1 million. And you take a batch of these cars, and there's about 100 of them, and they equal 75 million. So what Reg A allows you to do is raise money under one legal entity, an LLC model, which Marty will help you. And then underneath each of these assets, it's a series. And then you run a platform where people can buy and trade the securities of each of these assets right on the spot. So we're seeing this now for shoes. I have clients doing shoes, belts, art, music, real estate. And real estate is going to be huge. Why? Because there's commercial, residential, multifamily office. So the regulation is just exploding in people's minds what possibilities are available. And part of that is because right off the get-go, I said, it is the holy grail of regulations around the world. There is no other regulation in the world that allows you to raise the capital and have a free trading security and remain a privately held company while you're doing that. And I mean, that's powerful.
Oscar, can you walk me through the investment process? Like, let's use an example of you're advertising on Instagram. How do you go from an Instagram ad to money in the bank? What does that look like through Koreconx?
So the way the regulation works is when a company raises it's raising its capital, the regulators gave it another gift. A lot of gifts, of course. So this one, it says that you can raise the capital directly on your website. So you can have an invest button directly there with the link of the SEC document where the investor can view the circular, but invest right there. So immediately the investor can click on your link, enter all their detail, their name, their address, enter all the requirement information, because in the back end, there is a FINRA broker-dealer who has to perform KYC. So they'll do ID, identification, AML, anti-money laundering, sanction screening, and suitability. And once all that's done, they will then pull the funds, either ACH or crypto or IRA account, and then eventually they will close those round. And then when they close, they're doing rolling closes. That means as money's coming in, the broker-dealer and the issuer are closing and taking money out. And so now when it comes to advertising, everything we do, we track. So people want to know, is my Instagram account working, or Facebook, or where's my traffic coming from? So all of this is digital footprint. Digitally, an investor can be tracked all the way through and know where they came from, what ad they looked at, or what blog they read that got their attention. And if there are like-minded individuals that like that, you emphasize and you bring it back in. This is the most amazing way of raising capital if you understand how to apply all the technology elements. And that's what we've done at Koreconx. We're more of a back end. We don't build the pretty sites. There are companies who do that. We just make sure that if you're going to get traffic of 10, 20,000 people, you should know every single person coming in. So you understand who is going through the investment process, who's dropping off, why are they dropping off, and then to understand how to retarget that audience. And it has to be all electronic. You don't need a big team. I mean, most Reg A's, there's only 2 or 3 people in the company. That's it.
So when you go to Koreconx, you look at all the partners, there's like so many partners, and you've created this ecosystem, and you've used some really important words of, you got broker dealers, you got tracking, you got different softwares and legal groups. Can you explain how the ecosystem works at Koreconx?
Sure. So the thing that the regulators did here for Regulation A, or under the Jobs Act, try to imagine what it was before then. So before, the onus was on the company and the third parties to do all the work, to do the due diligence and all that. So in Reg A, what they've done is all of that work is done in the front end, but the regulators wanted some protections. So one of the first protections they wanted a third party, being an SEC registered transfer agent, to managing the book of records for the company. So that's number one. Number two, they wanted to make sure that the company was using a FINRA broker-dealer in order to make sure all KYC was done. And then, of course, you need a lawyer like Marty Tate. There are times, though, the reason why we have so many of different kinds is because not every lawyer does every sector. We're agnostic. That means we do from A to Z. And in there's cannabis, and not everybody does cannabis. There's spirits, there's blockchain, there's this and that. We view it as long as the regulators qualify it, and what we do in our ecosystem is we partner our clients with the right lawyer and broker-dealer and auditor, all the requirements, so they can get there faster. We have no financial relationships with any of those parties because it would be illegal, first of all, but it's not our thesis, the way we operate. And so we want clients to be able to get there really quickly. And that's why you need a team. I mean, there's a lot of differences. What Marty does on the LLCs in the series, there's not that many people that know how to do that. I mean, this is the reality. There's only 2-3 lawyers in the entire United States who actually understand that. And people go, why is that important? Well, here's an example. So you take lawyer A, who is a securities lawyer, who has kind of dabbled in Reg A, but really hasn't done it. And then there's Marty. And you go with the LLC series with him. Marty will get you to start to finish maybe 3 to 4 months. This one, you're a year and a half or even longer. And why? Because it's the nuances that they do not know that the SEC is looking for. And so, yes, you can go read Marty's work before, but you don't understand the underlining everything. That's the beauty of the regulations as well. Everything is fully transparent. You can download everybody's filings. You can review it and say, okay, well, then I can copy that. It's not always that simple, but it's a necessary element. And we also look at it this way. Every client wants to be taken care of by different parties. You know, we have ESG clients. They want an ESG broker dealer, ESG lawyer, ESG bank. So we have to appease. We have different banking partners. Why? Because some of them only do cannabis. Some of them only do blockchain. So in order to appease a sector, you can't just have one.
So we've mainly focused on Reg A plus on this conversation. Do you also raise money through Reg CF, Reg D, and Reg S? You know, do you have other bodies of regulation you work with?
We work with in the United States, Reg CF, Reg D, Reg A, Reg S, in Canada, 45106 DOM, Australia, 708. So we have transacted also in UAE. So we build an infrastructure that no matter where you're transacting, the regulation components, workflows already built in.
Wow.
And that way you harmonize how you're raising your capital. If companies are doing Reg Ds and Reg S's, I often wonder, okay, wait a minute. You know, your better bet is go to Reg A. It's like the reason for the Reg D and Reg S in the past was because Reg A didn't exist. And if some of you didn't know this, the Reg S was actually named after another colleague of Marty Tate, Sarah Hanks, when she was at the SEC. So, we have the best of the best in the group. And look, we're also honest. We give you a budget. You've got a budget for this. So this is something that another big part of Reg A that you need to be ready for. And so you need to budget, between 200,000 to 250,000. And why? Because you got to pay the lawyers. You got to pay the audit. So the lawyers are going to be anywhere from 50,000 to 75. It could be more, but they're usually flat rate. So that's a good deal. Trust me, with the amount of work that they do. The audit could be anywhere from $2,500 to, whoa, why 25? Because if you created the company yesterday and you needed to get it audited, they do a flat rate and it's done. Then after that, it's really the broker dealer. The broker dealer gets paid 1% to 3. And the reason for the variance is depending what additional services they may or may not provide. There is FINRA fees anywhere between 10 to 15,000. Our fees are at front are $3,500. So where's the rest of the money you're asking for? Marketing. Marketing is so people go, Oscar, that's a lot of money for marketing. It isn't, because you're looking at, if you went to your regular business budget and you go, look, I got budget of $600,000 for marketing. Okay, that's your budget you carry over here. The only difference is that you're now having your purpose of your marketing in your company is to also drive people to come to invest in your company. First, they need to fall in love with you. First, they need to trust you. They need to be, like-minded individuals. As soon as you have that, you can bring them into the next phase. There was a time, as I said in the beginning, you could bring the person directly to the investment page and voila, they put in their $1,000 in their credit card and done. Today, you got it. Just like the 7 steps of marketing, you got to adapt all of that.
So I think I've asked all of my key questions. I wanted to open up to the group for any questions with Oscar. I know Kelly, there's a couple people that have raised money through Reg CF. Is there any questions? I want to open up to the group now.
So I want to weigh in a little bit before, because I know that last time we talked, we talked about Reg A, and Ryan came back and said, hey, I feel like I was unnecessarily a little bit negative on it and want to give it another shot. So because I'm like Oscar, I'm a big proponent of Reg A. I think it opens up a lot of doors, and like Oscar said, it not only allows you to reach a lot more, a greater number of potential investors, it also allows you to really market what you're trying to do. That being said, this group, as we talked about, Reg A is not necessarily a great option for funds, for blind pools. If you are a company that would need to register under the Investment Company Act, but for an exemption under 3C1 or 3C7, this is not for you. We've talked about that. So if you're going to go out and say, hey, we want to do a blind pool and invest in a venture capital fund, or we're a venture capital fund and we want to go out and invest in a portfolio of companies, Reg A is not great. I mean, I've got a client right now that says, hey, we want to go out and invest in all these companies in the Philippines that we have connections with, and we want to do a fund, we want to do a Reg A. That has been a square peg that we have been trying to figure out the best way to fit in a round hole, because it's not necessarily for them. However, if there are certain quote unquote funds that could qualify. Ryan and I worked on the first oil and gas Reg A, and we got that qualified with the SEC under a separate exemption from the Investment Company Act. There are exemptions for real estate. There are exemptions for other mineral rights. There are things to do. That being said, I know a lot of you say, well, we're doing a fund, but if you step back, it's not really a fund necessarily. It's an operating company. You own storage units. You own single family residents that you own and manage and flip. Those types of things, that there are ways to make those things work. It can't make everything work, but there are applications for Reg A to what this group wants to do. So I just wanted to put that out there. Oscar did such a great job of saying, this is how wonderful Reg A is, and I agree. But there are limitations for, for funds like we talked about.
There is one company that I was just telling Marty as well, that we did. It was a venture capital group that wanted to use Reg A, and it was difficult, but we got it qualified. So what they were able to do, it's public record. I mean, you guys can read it. So basically what they were able to do was list the potential opportunities and in there. And they weren't saying they weren't which one it was, and they even indicated that maybe it won't be any of these, but they did list about 15, 20 companies that they were targeting as part of their capital raise, and that they were going to have the control that was required under Reg A. So that's been attended. But if it's a true fund, no, it's great point by Marty there as well. We are noticing a trend, at least in the last 8-9 months, where people are doing Reg CF before they do a Reg A. And I know this is because it's a lower cost to entry, faster. It's $5 million, but at least it gets your feet wet into the process, and then you can step into a Reg A. Because a Reg A, there is a longer process getting into it.
Right.
Yeah, and that was, Oscar, that's a great point. This company that we're working with, the Philippine-based investments, what we talked about is doing a Reg CF. They're actually going to do a Reg CF and raise capital in connection with their sort of first acquisition. And it's basically we're raising capital in connection with acquiring this company that we're going to manage and operate. And then they're going to do a Reg A to go out and not only expand operations, but look at synergistic opportunities. So it's not quite a fund, but it's an operating company that's going to be making investments. That's how we're hoping to in it with the SEC.
Yeah, I just remember I was going through the Rolodex of our other client. The other one is we have another one, same thing. Their list was not as big, but they raised the capital and they immediately acquired an entity. So Legion Works is that one, Marty. Legion Works is and Seismic Capital is those are the two Reg A's that we've done that way. But I'll say this about the regulation. You need people who know the regulation inside out. Again, I keep going back to Marty because my livelihood as a company, I'm a tech company, right? So I built the regulations to keep everybody safe after the fact that you've gone to Marty. Marty will tell you, oh, you got to do this, but you know how people are, they'll forget. Technology never forgets. So how we work well together is that once you come on board, we put you within the ecosystem. Nobody is going to do anything unless it's compliant and keeping Marty and everybody on the loop. This is the first crowd of the capital raising is the very people you're bringing together, the lawyer, the auditor, the SEC transfer agent, the technology provider, the escrow, the payment rails. I mean, there's a lot of people involved even before you get out there. And that's where you get to test, telling them your story, what you're doing. So it's like your capital raising 24/7 until you achieve your goal.
Yeah. Hey, Oscar, we got a couple questions in the chat. I know, Peter,
Yes.
you raised your hand. I'll just read the first one. Russell, do you want to come on and share what you guys are doing and ask your question, or you want me to read it?
Yeah, I can come on. So we do invoice factoring, so we buy receivables from companies. We also do some short-term lending along with that. Is that we have a Reg D debt offering at the moment. Is a Reg A plus something that can be used to do a debt offering to fund invoice factoring operations?
The answer is yes. You can even create a bond. We did the first 2 bonds in the United States ever for Reg A. So it's doable. It gets you to reach a larger audience. Using the technology is one part. The second is that you need to become technology savvy yourself because you're now servicing that audience. You need to service them differently than you were servicing your previous investors.
Okay, thank you.
You're welcome.
And I'm currently working on a Reg A right now that's a debt offering. They're offering, debt certificates that will then go in. This is going to something Oscar said. It's a series offering, but the series, instead of offering equity, is offering debt, and then that debt is basically performance dependent. The debt that it's issuing is dependent upon the underlying debt that will be issued by this series. So it's creative and unique in that way. But yeah, I never say absolutely no. There's always, that's my job to try to figure out the way to make it work.
Well, appreciate it, guys. Thank you.
Thanks, Marty. Next question was, since Reg CF is capped at 5 million per year, is it per SPV for all the raises you do in that year, even if you use an entity per deal?
So on Reg CF is 5 million cap on the company. I would never recommend an SPV ever. We can have that discussion now if you want to know my reasons why. But if your journey is to keep on raising capital, the SPV is going to kill you as soon as you move up the food chain to a Reg A. And we've seen it. Marty and I saw a company collapse itself. An up-and-coming company did a Reg CF, did a Reg A. On the sidelines, they did a Reg CF that it shouldn't have. It got stuck on an SPV, and from that day forward, it just became a downward spiral. It's rather interesting why the regulators never allowed that for a Reg A. One of the reasons why is that one of the other gifts on the Reg A, once you become qualified, meaning approved by the SEC to raise your capital, it's giving you a ticket for a direct listing to NASDAQ and NYSE. You still need to meet their requirements, but and we did the very first direct listing for a Reg A company. They did 4 Reg CFs and 2 Reg As, and then they went to did a direct listing. So we've been there at the forefront of all these different things that people want to keep trying. And that's one of the reasons why the regulators didn't allow SPVs for Reg A. The only time that I recommend an SPV for a Reg CF, if you already know that your next set of capital is coming from private equity or venture capital, I support it 100%. I truly do. But if your next capital raise is you're going to need more money, which we all do, and you may be doing another Reg CF and then a Reg A, then you just put yourself in one of the biggest problems because the investors are being managed by 2 separate, and each of them, they have a different transfer agent. So there's a transfer agent managing the SPV, and there's a transfer agent managing your company. And then the mistake that often happens to people is that investor initially is going to reinvest in you again. And then they're going to look at their portfolio and say, hey, what's going on? I just put in $2,000. Where is it? Now you got to go tell them that was an SPV. Boom. And that's when it begins.
Wayne asked, do Reg A plus offerings have tickers?
Well, once they get listed on secondary markets, so we have 3 of them today. Well, there are more than 3. There's roughly about 20 plus secondary markets now for private companies, Reg Ds, Reg As, Reg CF. Most of them don't want Reg Ds. Why? Because they don't trade. The company only has 2,000 shareholder limitation, and all the paperwork, verification, rule 1 for, oh my God, it takes forever. For Reg A, much better, simpler. Why? Because you get the trade check report that we provide that covers you blue sky registration in all 50 states. You get listed on the National Securities Manual. Boom. You can list on, Texture Capital, T0, Oasis, Rialto Markets, Templum. The choices are finally there.
Great information. Answers now.
Albert, you want to hop on and ask your question?
Yeah.
Sure.
If you-
How's it going, guys? As an emerging fund manager, how important is it to have a well-established operating company prior to starting your raise, whether that's for Reg CF, A, or D?
Well, let me give you an example. I know Marty's done a few of these. He knows we're doing it. We started the company in, what was it, February? You incorporated? February, and we're getting ready to do a Reg CF here in the next few weeks. So that's why the regulators in the United States were really smart, and they had a lot of good people talking to them, not me, people like Marty, Sarah, many others that contributed to that conversation to say, if you're going to open it up for everybody, you needed to open it up for the person that said, I want to start a brand new company tomorrow. And you literally look at us. How many of us here today? There's 31 of us. 31 of us. One of us will be the CEO, the CFO. 31 of us will be part of the company. Marty will incorporate it by tomorrow morning. And in the same day, we'll contact Assurance Dimension, one of our other colleagues who does the audit. He'll have the audit done. Today's Wednesday. He'll have it done by Friday. And then Marty can file the Form C. Somebody here will work on the business plan. You get the idea? It's really, really quick. Now, there has to be a sound business, of course. There has to be a good structure to what you're building. But the idea was not to exclude anyone. And you need to have some prerequisites, but those prerequisites, it's not meant to be a burden, but to be more of, these are the regulatory items. Now, there is a responsibility for the company. You don't just get the money and get to pack your bags and run. So in Reg CF, you still need to do your annual filings. And Reg A's, you still need to do, you may need to do quarterly and annual filings as well. But you're reporting to the very people who give you the money, right? And the very people, the likelihood that they're going to reinvest in your company when you go back to them. So it makes sense to be transparent. You need to be ready for this. I wrote an article about this. I call it, get ready to be naked. Seriously, you got to be naked. You got to be on the stage and not be afraid of yourself. Take all the punishment that you can and know and be candid with that audience. What's going on in the business. And I've seen it work. and I've also seen the ones when they hide. The ones that hide right after they raise the money, as soon as they want more money, imagine, you spent all that money to get 10, 20,000 people to support you. You don't do anything about it. Then you need more money. Now you got to go pay somebody to bring you another 10, 20,000 people. So you're accumulating the problem. You're not fixing the problem. And that's why it's important when you look at the Jobs Act, you can't just look at it. Okay, the regulations are fantastic. Reg A, amazing. Reg CF, great stepping stone. And the regulators are already thinking about increasing Reg A to 150, which is phenomenal. But you need to understand what all this means. So this means that prior to the Jobs Act being introduced, you and I, when we needed capital, we needed to bring other people to tell us how to manage our business. And they didn't give us the chance, or they provided terms and all that. So you weren't in control. So try to understand 2008 financial collapse. Don't need to remind everybody who lost and who won. So that was the thesis behind all this, was putting the power back to the entrepreneur. Okay. So taking it from one and put it on the other. I'm not saying you can't bring in the other groups to bring you value, but I'm just saying putting the control back here. But when you get control comes responsibilities. So the responsibility is not one to be taken lightly, because the same way that the regulators giveth, they can taketh. And meaning that they give us the gift to raise capital from anyone, and we just follow the rules. That's great. But we also have responsibility after the fact that we need to maintain. Otherwise, you're just tainting things. So, I've been doing this 14 years. Education is primary focus for all of us, Marty, everybody involved. We're not even at the cusp yet. We're not even there. Last year, just so you know, 151 billion was raised using the Jobs Act regulations. I mean, that's how far we've come in less than 10 years. Keep in mind, President Obama signed it in 2012. The first regulation didn't come into act till about 2013. It wasn't Reg A and Reg CF till 2015, 2016. In fact, the window's even shorter. Look what we've done so far. And the way it's going to keep growing.
What was that number last year?
151 billion.
I did not
so the
know
entire
that. That's insane.
The entire private markets, though, in the United States last year, 4.5 trillion. The private markets are growing at a rate of 6 times greater than the public markets. At the Milken Institute, less than a month ago in California, the #1 discussion was private markets. Family offices want private markets. So what's the problem in the private markets? Transparency, accessibility. It's it's fragmented. It's groups like you guys are one group and there's another group. So we need to solve those problems. The only way we're going to reach the greater number, the greater good, and escalate it is to understand the behavior that's happening. This is the most enjoyable. Look, my enthusiasm towards, I'm a Canadian. I don't know if Marty told you guys this. I'm a Canadian. I wasn't born in Canada, but I live in Canada. And when I met David, I dropped everything I was doing in the public markets, and that was it. I never looked back. This was it. This was going to be the thing that changes for every entrepreneur, because anybody who's ever tried to raise money knows how hard it is. But one thing David tells me, and I'm going to tell all of you, there's never a shortage of money, ever. In fact, in the United States today, there's $36+ trillion just sitting there. And here's the other reminder he tells me: money in bank accounts makes nobody money. Money needs to work. So when money leaves the public markets, where is it going to? The privates. So you just need to be found, seen, and heard. And that's what we're all trying to achieve.
Awesome. Thanks, Oscar. That summed it up so well. So guys, we have just a few minutes left. Any more questions for Oscar? Oh, Maria. All right. Do you have a question? Nope. Just a thumbs up. All right. Is there any more questions from anybody before we wrap this up?
Real quick, I noticed that this wasn't on the, I just found out about this in the chat. Is this a regularly weekly meeting at this time?
Yep. I'm not a coach. I got kicked off the general channel, but this call will be posted on the legal compliance channel. We're hosting it Tuesdays at 1 p.m. Eastern time.
Oh, every Tuesday. Okay.
Yep.
Thank you.
Albert, go ahead, man.
Can you hear me? Oh, awesome.
Yep.
Yeah, so in the past, someone has mentioned something about an international feeder fund. And then when you spoke about Regulation S earlier, just kind of looking into it, is that a better tool for setting up that kind of capital raise?
No. So let me tell you about what nobody tells anybody about Reg S. So what did I tell you? I'm a Canadian. And I have heard this so many times. Oscar, I'm doing a Reg D and I'm going to sell to anybody outside of the United States, accredited, non-accredited, because I filed a Reg S. I go, so wait a minute. I'm a Canadian company. I'm not legally allowed to sell to those shareholders, but you can? Not going to happen. So the biggest mistake everybody makes in Reg S is that they forget to read the fine print. And the fine print is the following. One, you need to follow the local securities law of each jurisdiction. So your cost just goes through the roof. So I'll give you an example. You come to Canada, we have 13 securities regulator and one parle la français, meaning you sell to any Quebecer, you have to provide everything in parle la français. Everything, your website, your everything, manual, that is a requirement. So most of us stay away from Quebec, even in Canada. But so though I wouldn't recommend it for that. For that, you're going to do a feeder fund, you just do a Reg D, accredited investor 45. That one you can fit. With the Reg S, it's just basically you have to be extremely careful because it gets a lot of companies into trouble in different jurisdictions because each country, think about it, they have their own protection, how they protect their securities regulation. Every country has a different regulator with different rules, how you can sell to them, what you require, right? Like in Australia and the United States share one thing in common. They require a third-party individual to validate whether this person is accredited. The one thing they did really smart in Australia, though, they limited it to one person, which is the accountant. So which is really cool, right? So you don't, the investor says, yeah, I'm a high net worth, sophisticated investor. That's what they call themselves. Great. But then you need to file. So there are many different little steps that are often left out that ultimately can cripple down the objective what someone was trying to achieve. I don't know if you have any more to say to that, Marty. I know you've had some experiences on these.
Yeah, so, and we've talked about it on this call, but if you're raising capital outside of the US, I mean, I'm Reg S to me, it's basically just the SEC saying, hey, we don't really care what you do outside of the US. We're here to protect US investors. But if you have concerted efforts in, any other jurisdiction, you have to comply with the rules and regulations of that jurisdiction. I have, as I mentioned and talked about, I have set up feeder funds. The idea behind that is that there were offshore investors, institutional investors that did not want to be taxed under US tax laws. So they said, we won't invest directly into the US, so we need to set up something in the Caymans or British Virgin Isles or a number of other jurisdictions so that they can invest there and have that entity invest into the US. That's, having an offshore feeder fund is not uncommon, but it's something that is really, it needs to be investor driven, meaning you need to have, I would wait till you have investors asking for that before you even think about that. But again, that's something that's very different than what we're talking about today, but that's, something I'm happy to answer questions about.
So I guess, can you just confirm for us, because there's moving matrices. I specifically have investors in Singapore that are looking to invest in fund. So can you tell us with the feeder fund, yes or no feeder fund outside the US or within the US, and then within the US or outside the US, should it be Reg D or Reg S? If you could narrow that down.
So if you have a feeder fund outside of the US, it's neither Reg D or Reg S. It's going to need to comply with whatever reg of that jurisdiction that you're offering the securities in. If we set up a BVI or a Cayman feeder fund, it needs to comply with the rules of of that jurisdiction. It would also need to make sure that you comply with the Singapore private placement rules. So I actually, it depends. I mean, if you have Singapore investors that are trying to invest in the US and do not want to receive, US tax statements, then a feeder fund is a good option. But it's not, again, that doesn't really fall under Reg S or Reg D at all.
No, but in Singapore, I did work in Singapore. You need to be registered though.
Yeah.
You need to be registered in Singapore. Otherwise, the penalties there. They are one of the harshest regulators when it comes to stuff like this. So have some guidance over there. If you don't, let me know. I'll connect you. There's a few firms that specialize, and Marty has them as well.
Yeah,
sorry.
Yeah, we work. Yeah, I have a firm that I work with in Singapore that's helped with offerings there.
You guys, we got time for one more question. Owen, I think you had your hand first. Sorry, Maria. Owen, you got a question?
Yeah, this is awesome. Thanks, Oscar. Thanks, Marty. Curious, like Marty, you said Reg A isn't good if it's a blind pool fund, but the marketplace, that sounds amazing. I'm in real estate, so I'm kind of curious on what would be the best way to do that. Would it just be to do it on an individual per property basis to do a Reg A?
So real estate's great because real estate is not a security. So if you're investing in real estate, I mean, Reg A has been a huge win for groups like Fundrise and Realty Mogul who have set up these REITs that they are investing in this, whatever type of asset. So real estate is actually an exception that you can to the Investment Company Act as long as you're investing in, directly into real estate. Then that's it. You would qualify for an exemption under the Investment Company Act. So it actually works for real estate funds. It doesn't work so great for venture capital funds.
Oscar, Marty, what's the best way to get a hold of you guys?
I'm easy to find. It looks like one of you already found me on LinkedIn. Oscar Joffrey. I'm on LinkedIn. I'm on Twitter. I'm on Facebook. My name is Oscar Joffrey, Joffre. I'm on Wikipedia. I'm not difficult. My phone number, my social insurance number, everything's out in the public. Anytime you'll find it. Look, foremost, we want to educate. Second, before you do anything, we go through it over and over again. Why? We just always want to make sure there's a lot of great opportunities here. We have a lot of documentation. If you go to my website under resources, we have the largest library for Reg A, Reg CF, Reg D regulations. Everything. Marty's in there, from lawyers, accounting, marketing, compliance, the whole works. Broker dealers. The more educated you are, the better, more prepared you are going forward.
Awesome. Thanks, guys. I do have to jump. Oscar, I might be reaching out to you. I was asked to run a marketplace for my university, Colorado School of Mines. They've got a bunch of money going into entrepreneurship, and they want to host their offerings in a hub. So I might be calling you.
It's the future. These marketplaces are exciting. It's a win-win for everybody, and Marty and I are working on a number of them, so it'll be fun.
Awesome. Fantastic. Well, guys, thank you so much. Oscar, if you don't mind, I should probably ask your permission. Can I post this video recording into the group so they can rewatch it for those that missed it?
Sure.
Fantastic. All right.
100%.
Well, thank you everybody for joining. Next week, we'll be having another awesome call Tuesday at 1 p.m. Eastern time. So
Thanks, everyone.
But I'll see you guys next week.
Everyone. Bye.
See you, Oscar.
Bye-bye.
See ya.
Bye-bye.
Bye.